if we look back a year ago, Uber is actually down. We're down about 5%, but this year has had its ups and its downs. We've been lower. We can see the 52-week lows around 55, but even as far back as 2 months ago, we were at 85, which is dramatically higher than where we are now. And Uber is a company that's done pretty well over the last 5 years. This isn't necessarily a shrinking company at all. You can see over the last 5 years, the share price is up 110%. You are beating the S&P 500, which is only up 90%. However, it doesn't pay a dividend. If you include dividends, let's just say it's a wash and it's even. But still, Uber, right now, this could be a good buying opportunity. It could be pretty cheap. Let's take a little bit look at that in the PE, right? This is Uber. I was already down here. You can see the PE is 29. Forward PE is 32.5, which is interesting how we get here, because we can see, well, the earnings are just kind of all over the place. You beat dramatically, then you miss dramatically, and then this last quarter we also beat by 80 cents. That's a lot, considering you're only projecting 41. So even though forward PE is lower, it seems like we're projecting to stabilize earnings. Fingers crossed. Not that that's a great thing, but it's not great for investors when things are like that, right? It's just a bit weird. But let's look at the history of the earnings of it. Yeah, you were unprofitable in 2022, 2021, and I'm assuming 2020 were probably pretty good for them, up 118 and then 110%. But that's a bit. You got to be careful with companies becoming profitable, and that is what was happening here. You were not profitable, now you are. These numbers are dramatic, but we can see revenue increasing 82%, 17%, and then 17% this year. I like that. This is a company that is growing and growing quickly. 17% year over year revenue, as long as you can make some money on that, which they are, that is really good revenue growth. You would probably expect the average company to have about 10%, 10 to 12%. S&P 500 does about 10 to 12% every year, and that's kind of the benchmark for the average company, at least average large company in the United States. We can see what some people have to say. Schwab gives it a 66. You got a narrow economic mode, although I disagree. You're probably somewhere in the middle. You got 4 stars, buy, avoid, buy, some ESG stuff, no dividend. So where am I personally standing on this stock? I do not own this stock. I don't hate it. I don't own it personally because there's only so many. I only have so much money. However, I do think Uber is in a good spot. I think this is a good growth investment. And what I mean by that is I think this stock over the long term is going to do fine. It's probably going to grow more than the average stock. However, its PE ratio is slightly high, just slightly, maybe 10 to 12%. And Uber, because it's becoming a company that is profitable and wasn't previously profitable, if you had something like a recession, you would probably have this stock being hit more than the average company, certainly more than value stocks. But I think Uber is a decent play. I don't think it's incredibly expensive. I think it's pretty cheap. If you like this stock and you want to buy it, this is a very good opportunity to do so. Because like we said, just as early as 2 months ago, this stock was significantly higher. And it's probably going to jump up and down. If you're a trader, this is probably a decent entry point. Maybe it keeps falling a little bit, but I don't know. I'm not much of a trader personally. I don't know too much on it. Let's take a little bit of a look at the history of the PE. Yeah, we can see we had Ford PE 28 about a year and a couple months ago, so 15 months ago. Other than that, this is cheap as it's been in a while. So if you like this stock, you've been waiting to buy it for a while, waiting for a good opportunity. In my opinion, this is a decent opportunity. Of course, not investment advice, but I would not be opposed to entering Uber here. You can see a lot of the analysts are saying buy. Usually with growth stocks, you aim for about 2/3. That's probably pretty average for analysts. Right here, you're getting significantly above that. You got 46 of the 54 are saying buy, which is really good. Another thing I didn't really cover is the industry they're in. Just with what Uber does, I think it's a very competitive, I don't know, it's just tough. It's a tough business with Tesla. There could be automation there if Tesla super wins, but I think Uber has enough resources, has enough name brand awareness that they could pivot and adjust to whatever lies ahead. However, you may if you're aiming for a worst case scenario as a long-term investment, you may say, okay, maybe their margins aren't super great. Maybe Tesla takes some of that just because they have to use Tesla stuff. I don't know. I'm not saying that. I think if, let's just say Tesla's stuff was just home run out of the park, everyone had to use it, right? I'm sure Uber would team up with them and deploy their capital. I mean, they're a $126 billion company. You do see companies that size go away, but it's not super high. I would factor in maybe whatever your risk of, okay, this company could disappear because, anything could happen. An Enron situation, they could be cooking the books with any company, right? Whatever that factor is, maybe double that risk factor when you're looking at this company if you're being super cautious. I wouldn't worry about it too much. I think I've covered most of what I want to in this video. If you enjoyed, I appreciate if you left a like or subscribe. I do daily stock content on this channel. I'll catch you next time. Thanks for watching.